profit alone doesn't tell the whole story. As Semirara Mining and Power Corporation entered 2026, robust first-quarter earnings suggested business as usual. Yet for investors accustomed to a reliable spring dividend, something critical changed, and it wasn't just a matter of numbers. Semirara reported net income of 3.82 billion pesos, down just 12% from a year ago. At first glance, with cash on hand more than doubled to 10.58 billion pesos, the financial footing seemed firm. But a closer look reveals a twist. This stronger cash balance was buoyed by a 5 billion peso bank loan, while receivables surged and inventories swelled to new highs. Historically, Semirara was seen as a seasonal cash machine, consistently rewarding shareholders in spring. The absence of any declared dividend by end April, after 2 years of reliable payouts, immediately stood out. Last year, over 8 billion pesos were declared by this time. This year, nothing so far. Why? The answer lies in cash conversion. While revenues remained strong and margins healthy at 25%, net cash from operating activities plummeted to 1.25 billion pesos. Growing receivables and accumulating stockpiles tied up cash. Profits made on paper didn't translate into money in the bank. Semirara's own disclosures cited delayed collections and a surge in coal and fuel inventory as the main drivers. The inventory story mirrors operational shifts. Coal production rose 4%, but shipments fell, especially abroad, leading to a massive stockpile, over 6 million metric tons by quarter's end. For a mining firm, holding inventory can be strategic but costly, as more capital gets tied up instead of distributed. The company's balance sheet remains solid, with high equity and low net debt. Solvency isn't in question. The shift now is towards balance sheet management over seamless cash generation. Segment analysis further highlights this change. The coal business stayed strong, but power operations, hit by outages and maintenance, dragged earnings. It's in this context that the absence of a dividend, a seasonal certainty until now, carries real weight. What does this mean for investors? The familiar focus on how much will be paid out is giving way to questions about timing, capital allocation, and operational resilience. The first quarter of 2026 tells a story not just of profits earned, but of cash deferred, and of a business recalibrating how it balances growth, liquidity, and shareholder return.